Hey, this is Matt from InvestiQuant. Today is Wednesday, July 29th, 2020. And today is the day of the FOMC announcement. That'll be out at 2 p.m. Eastern Time this afternoon with a speech followed up at 2:30 p.m. Eastern Time. So a day that often gets some significant volatility happening in the afternoon. But what I want to do this morning is just take a look at what has happened historically on FOMC announcement day when gapping up. We are currently trading higher this morning as we approach the open at the time of this recording. So let me go ahead and set this up. We'll go ahead and look at all four instruments. The setup is simply going long at the open and exiting at the close of regular trading hours. So that's at 9:30 a.m. Eastern Time to 4:15 p.m. Eastern Time holding period. The opening filter we're going to use is simply gapping up. And then we're going to go into the market events section and say that it is the day of the FOMC announcement. And lastly, I'm just going to put it above a 200-day moving average. Then I'm going to click View Results. And here we go. These are the results of going long at the open of regular trading hours, 9:30 a.m. Eastern Time, when gapping up on the day of FOMC announcement. So historically, we've got 65 samples in the ES, 75 in the NASDAQ, 59 in the YM, and 60 in the Russell. And looking at the win rates, ES has been quite weak when gapping up on this day. Just a 35% win rate. NASDAQ's 50-50. YM just a little bit weak, 44%, and Russell 41%. So historically, gapping up on the FOMC announcement day when above the 200 has leaned a little bit to the bearish side. Now, I do want to say I've looked at this several different ways, and opening location really matters on this day. So if we're not gapping up, if we were to gap down, you would see the results would be quite a bit different. They would not really reflect these. So opening location is pretty important today, and if you have access to the platform, I encourage you to dig into that. Now, knowing that this gap up on FOMC announcement day has a bearish bias to it, and this is just an end of day bias. I realize most of you don't trade that way, but what you can think about it is perhaps like a gap fade trade. If we're gapping up, you can target the prior day close, and I can show you real quick how you can test that. Nothing else will keep this exact same pattern, but if I come to the setup, we'll keep the intraday open as a setup and then change the trade type to a fade. And the fade will allow you to, this is where you would be shorting an up gap and then targeting something below. And as I mentioned, a gap fill trade might be an idea here. And if I put prior close here as a target, we can throw a stop on it. I'm going to use 40% of the 5-day ATR as a stop. That's somewhere around 14 points today in the ES, but you can use whatever stop you want in here. So if you have the platform, you can dig into this quite a bit more. But just for example here, I'm just using a 40% stop, and then I'm going to run the results again. And here are the results of what has happened historically when you gap up on FOMC announcement day above the 200-day moving average. If you were to go short, targeting the prior day close, so this is a gap fill trade, with a 40% of the 5-day ATR as a stop. So you have a stop on there. I didn't put a minimum gap size on here. We usually do that when we dig into these setups, but you can do that in the opening filter section. But historically, it's been fairly favorable for a gap fill like trade. So this is an idea you can dig into. Like I said, you probably do want to go into this opening filter section and add a minimum gap size and maybe find a stop that you like better than the 40%. This was just a quick example to show you what else you could do here. So historically, that has been a fairly favorable trading setup where you're filling the gap when gapping up on FOMC announcement day. But again, play around with the opening filters. The opening location does matter, and you'll probably want to put a minimum gap size. So just to get rid of the gaps that maybe only be a couple ticks or a point or so, and that can sometimes inflate these numbers. These numbers are really strong right here, where you're seeing 77% win rate there on that ES. That's pretty strong. But if you add a minimum gap size, that's going to go down a little bit, but it won't change it drastically. So just some ideas to think about. Good luck today, and we will see you next time.